Well, we're bankrupt in 6, 5, 4, 3, 2, 1, and we're out of business.
Hey guys, Ralph here from the Endgame Investor, and the Treasury is within about 10 days of zeroing out its cash balance in its bank account at the New York Fed. It has about $188 billion left, which is enough for about 10 days at the pace that it has been draining its cash balances. This is probably not going to result in an immediate default because there are emergency measures that the Treasury can take, such as issuing cash management bills or CMBs. And I asked ChatGPT today whether or not CMB's cash management bills are counted towards the statutory debt limit. And first it told me that yes, they are. And then I asked it for its source and it said, oh, no, I was joking. Actually, they're not subject to the debt limit. And then it gave me a reason. I'll read that to you right now. It goes like this. ChatGPT says to me, my knowledge cutoff was September 20th, 2021. But as of that date, I knew that cash management bills do not count towards the statutory debt limit because it is explicitly stated in the Budget Control Act of 2011. This act exempts cash management bills from the debt limit calculation, allowing the Treasury Department to use these bills to manage the cash balance without exceeding the debt limit. The exemption was also upheld in a 2013 ruling by the U.S. Government Accountability Office. And so that sounds sourced enough for me. Back in 2020, the Treasury issued about $5.7 trillion of cash management bills. And in 2021, it went down to a measly little 4.075 trillion. And in 2022, it's just been just under $1.5 trillion of these cash management bills. These are typically very short-term bills that only institutional investors like commercial banks like JP Morgan can invest in. So let's look at the chart of the remaining cash balance in the Treasury's bank account and what they're going to do next. We have here the Treasury's bank account at the New York Fed for the day of May 3rd, 2023. And we see here we've gone down from $296.209 billion to $188.309 billion, which is a fall of about $108 billion. Now that tax receipts are no longer coming in, here we see a jump from $86 billion to $296 billion, which is like $210 billion in tax receipts. Well, those are over now. And we're going to be draining back down as we see every year. If we zoom out to a 5-year chart and we go to the first week of May, right, in 2022, for example, last year, that is when the cash balance of the Treasury topped after the tax receipts from April 13th came in, which is income tax day. Obviously, we all know that. May 4th was the top at $964 billion, and then we went down to $919 billion. And then $866 billion, and so on and so forth. So we are probably at the peak here of cash balance, and we've gone down $108 billion, $188 billion left. That's less than 2 weeks of money left. What happens then? And we have a hint from this article from Reuters, Fact Box, the U.S. Treasury's tools to avoid breaching the debt limit. One of the solutions, which I think will be utilized, is issue more cash management bills. The Treasury, it says, could cut issuance of longer-term government debt and rely more heavily on short-term cash management bills to gain more day-to-day control over debt outstanding. Cash management bills are typically used for days instead of normal Treasury bill maturities of 4 weeks to 1 year. But this is unlikely to buy much time, and officials have traditionally been wary of making major shifts in the Treasury's debt issuance calendar, which could upset markets. So I don't think we're looking at a default, even if the Treasury runs out of cash in its bank account. We're going to see a whole bunch of tricks come. The question is, how far are Republicans going to try to pull this and force them to use trick after trick? Or is the Biden administration, the Brandon administration, or whatever you want to call these clowns, are they going to try to raise the debt limit by executive fiat or power or whatever, and just because they feel like it, and say that, oh, the U.S. can't default on its debt because that's unconstitutional, and then it'll be a fight in the courts, and the Supreme Court's going to have to ultimately decide? Oh, I wouldn't put it up to the Supreme Court if I were the Democrats, but ironically, they'd be interested parties because the Supreme Court would be voting for or against its own salary, basically. And so while I predict that there will be no default day as such, I do believe that the cash balance in the Treasury's account at the Federal Reserve will go to zero, and the government, the Biden administration, is going to have to exercise some very interesting tricks that will rattle debt markets and could cause who knows what in the metals markets. How is this going to affect gold and silver? Well, judging by the technicals, it's probably going to push it a lot higher because it creates a lot of uncertainty when the only thing that's keeping the government funded is emergency cash management bills that are only a few days in maturity. Then you end up with the situation of a hamster running on a really, really fast treadmill. And you have a situation of, let's say, a 15-day cash management bill being used to pay back a 30-day cash management bill. And this is not a safe environment to be in. And if gold and silver make enormous jumps at this time, if Republicans choose to force Democrats to use these interesting tricks to keep paying the bills, I'd get in before the cash balance of the Treasury at the Fed goes to zero within the next 10 days, it's looking like. Of course, if you want some physical gold and silver before the Treasury runs out of cash, go to MilesFranklin.com and tell them that the Endgame Investor sent you, or call 855-GAME-END. And you can always become an Endgame investor yourself by clicking the link in the description below for a 2-week free trial, or become my patron on Patreon, where I give biblical commentary on this stuff. God bless. Happy bankruptcy. And here's the countdown that we've all been waiting for.
10, 9.
Okay, we're here.
8, 7, 6, 5, 4, 3, 2, 1, blast off.